Hey guys, welcome everyone to Binomo. Thank you for joining me today on Friday. Today we're going to be talking about what's this reality situation, there's a lot of us out there believing trading is a different thing from what it's from the real thing, okay? So this perception being able to be giving you a wealthy lifestyle. You know, a lot of people thinking trading is a get rich quick scheme. This is something to talk about because it's seriously affecting beginners and it's seriously causing a lot of frustration and not to mention money lost. So we want to talk about this. I think you have seen on social media, you have seen on YouTube how people are flashing their lifestyle, their rich lifestyle, and they say it's coming from trading. It's coming from Forex. Have you seen those kinds of ads and messages on social media? I'm sure you have. I've seen a lot of that, and we really got to talk about that today. And if you have seen ads like that, put it down in the chat, put it down in the comments, so that we can also share with others all these different perception, the wrong perception about trading. There are people out there flashing Lamborghinis, flashing big houses, flashing every day relaxing at the beach. You don't have to work, you don't have to do anything. There's no hard work involved, and you can be successful with trading. This is where all those advertisements, all those social messages and social postings about rich and wealthy lifestyle and freedom, and they say it's coming from trading. It is absolutely different from the reality, and especially for beginners. So we definitely want to make sure that we in the group of people who know what trading really is, or what the reality of trading is, and that is, it's not an easy thing. It's not Success is not something you can achieve without doing any work. And if there are people saying that you need to trade, it's really dangerous because you are watching things that is one of the best ways to make mistakes in trading. Okay, so let's really talk about that. The reality of trading is, you know, it is different. Trading requires education. To be a good trader, to be a trader uh, who understands the market, a trader who understands themselves, their attitude, their psychology, a trader who understands the limitations of forex trading, or uh, the kind of trading you can do on our platform. It's not something that doesn't require thinking. You need to be educated. You need to understand. You need to read and you need to do research. And after all that, you need to do a lot of practice. And even when you have done all of that, trading is still not going to make you change your lifestyle around from nothing to flashy and extravagant, because success in trading requires consistency, and the consistency is something that has to happen over the long term. Okay. For people who think that you can be successful in 1 month trading, coming from nothing, coming opening an account with $1,000, and then by the end of 2 or 3 months you can have 5 million. That's absolutely crazy, and that is not trading. I tell you that. The reason that is not the reason that is and made up is because trading is connected to real markets, and markets are connected to everyday situations and definitely to the economy. We say economy, if you talk about forex, we're talking about any dollar assets. You are linked to the U.S. economy. The U.S. economy is this one huge thing, has many components to it. You can't be reading one piece of news and thinking you understand the U.S. economy, Therefore, you're going to be successful trading US dollar assets like GBP USD or AUD USD. It's not like that. Okay. First of all, you have to understand that it is dynamic. Sometimes the expectation is for the economy to report strong economic numbers. And then when the numbers come out, and it is strong. However, the markets react differently from the expectation. So if the expectation is that GBP USD would go down because when a strong US economy produces strong economic reports, strong economic data like non-farm payroll or low inflation, what what is expected is for GBP USD to go down. To give you a simple example, oftentimes you see that that doesn't happen every. Sometimes the market moves in the other direction, in the opposite direction, and there's no one explanation why the market is doing that, and you cannot blame the market if you think you have made the correct analysis, if you think you have followed the correct news, and then the market moves in a different direction. You cannot blame the market. The market is dynamic. Sometimes the market pays attention to what is currently happening. Sometimes the market pays attention to what is going to happen, not now, but next year or the end of this year. So there is no telling when the market is going to shift their perception, its perception. All the traders in the market make up that expectation. So the markets can move in totally random and different direction based on what is the uh, overriding or majority theme or majority belief or sentiment at any given time. So there's no sure when so talking about market dynamics is there's no sure thing about the market. You have to have skills to understand where things are probably going because every decision you make is about probability. After you analyze assets and chart patterns on platform or on other charting tools, after you read all the news that's available about the assets that you want to trade, you have to form a strategy how you're going to trade the asset if it moves in the direction you predict. If the asset doesn't move in the direction that you predict, you also have to have a strategy, have a plan to move in the other direction, or whether you stay out of the market for a while. Because if the market is not predictable, there is no point going into the market with your money because that is one of the ways you're going to lose money. You see? So market being dynamics is something that guarantees it's not easy to make money in the market. It guarantees it because it's just dynamic. It's different every month, it's different every week. And and then that dynamic part of the market or behavior of the market is what creates volatility in the prices of assets. Whether that asset is currency pairs, whether that asset is crypto, or whether the asset is CFDs. So prices can move in totally different directions, and sometimes if it's going down, it will spike up before it goes down, and those spike ups are going to kill all your down trades, or it's gonna make you lose so much money that you give up and throw your hands up and say, "There's no way you can make money in this market." Now, people who are good at trade, they don't give up. People who are good at trading, they look at volatility and take a step back and assess what's really happening. Is it my analysis that something is wrong? Is it the market's perception that has suddenly shifted in a different direction? What is the perspective? What is the current perspective, and what are the markets concerned about? Because it's like being in a beauty contest. Being in the market is something that you being one of the judges, you can't say that this is the most beautiful contestant, and you're gonna put all your money on her that she's going to win, because it's not like that at all. In trading, to be able to win, you've got to be on the same opinion as all the other judges. That's how you find a winner. You can't be the only one thinking with your own analysis, thinking, this is going to be the winner. I'm right, everybody else is wrong. It doesn't work that way. If everybody else thinks that another contestant, another participant is going to win, and you think differently from them, you're going to lose. So you have to understand what the market believes, and you can see that from chart movements, you can see that from fundamental analysis, and then trade accordingly. You got to have a plan. Now, jumping back a little bit, it is important to have a foundation. You have to have a mental and intellectual as well as psychological foundation to be able to participate in the market, have calmness, and have some sort of peace when trading. And this foundation is something that you have to build over time. So the foundation that we're talking comes from, first of all, education. You have to have basics. You have to understand basic indicators. You have to have an understanding. You have to learn. This understanding comes from learning. You have to learn about uh, how to use indicators, and then how to see chart patterns. There are different chart patterns occurring at the top of a movement. There are different chart patterns that appear at the bottom of a movement. And there are chart patterns that things are moving strong. And there are chart patterns that show up when the trend is actually not very strong, but is actually weak. So you have to understand all these basics and try them out. Because having practice when you are trying this out, applying what you understand about technical indicators, applying what you understand about chart patterns, applying what you understand about the economy and fundamental analysis is something that takes time to build. Okay, reading all the books about trading and tomorrow going into the market thinking you're going to make profit immediately is not going to happen. Again, trading is not a quick get quick get rich quick scheme. It's just not. It's like any other thing that you want to be good at. You want to be good at football. You want to be good at swimming. You want to be good at golf. It needs a foundation, and then that foundation, it comes from input coming from outside, coming from you taking in materials from videos or talking to people or just watching people. And then you got to practice it. You got to apply it. You got to know what the reality of applying certain concepts look like. And then after that, you start small and go to the real thing. You start to participate in competitions. You start to take uh, participate in games and leagues, and that's how you build real appreciation of how the skill fit for certain situations. That situation is a real market situation. You got to be able to apply that, but you cannot skip foundation. See, you have to start with foundation, and then you have to go to a phase of called practice or application, and then after that, you go to the real thing. You go to the real account, and you trade real money. So don't trade real money from the first step. That is definitely a big mistake. Okay, then I touched on psychology of trading. You need to have a psychological foundation. So trading, unlike other sports or other competitive intense activities, trading is something that can hit you differently. Because if you play football and you lose a football match, yeah, you feel bad, but maybe not too bad. If you play golf and you don't win top 10 or top 20 or Sunday match or competition, you're gonna feel okay. If you know that you are a beginner and you're not supposed to win. But trading is different. If you are a beginner, the few losses that is going to hit you differently. Why do I say that? Because when you lose, it's not about making a losing trade. You just lost money. So when you come into trading $100 and suddenly you end up with $40, it's different because unlike golf and unlike football or tennis, you can just come and show up next week or next month and play again. Your mood will probably come back. Not trading. Trading, you lost half your money and you're gonna come back. Two things are gonna happen. One, either you feel discouraged and feel hopeless and feel like you want to give up, but you still want to make back the money that you lost. Or there's another group of people who think that it's okay. Whatever happened, I'm gonna make it back tomorrow or tonight. So they come back quickly, thinking they're gonna make that money very quickly, and they're gonna get their balance back from $40 to 100. They're gonna get the amount. You gotta understand that that feeling or that thinking is coming from emotional volatility. Comes from emotional, false emotional confidence. You know, how can you have the confidence that you are going to win when you've just lost a lot of money? Unfortunately, a lot of traders feel confident. They think that they can make back their money in a very short time, and that's not true. And that is how traders lose even more money. So they would not. So they have their $100 account, and then it goes down to 40 because they didn't have any kind of strategy or their foundation is not enough or lacking. What they will do is, if they trade with the $40 without fixing themselves, without fixing their strategy, they would also lose the $40, and in the end, the $100 turns to zero. Now, some traders give up, is okay. Some traders go back and start to fix themselves, that's okay. There's another group of traders who will come back with more money. They will come back with $150 this time, you know? So that's how you lose even more money. And when your psychology is not prepared, when your psychology of trading is untrained, you haven't trained your psychology to win in trading, you will lose more money than ever. And you don't want to do that. Okay. And then some people do that because they haven't read about psychology. Some of them read about all this stuff. They read it in books, they see it in videos, they listen to trade talk about all these things. But the the belief that trading is a way quick rich, that is what gets them. They falsely believe that to be true, and that's how they get their confidence to come back with more money and then lose even more money. So don't be one of those traders. Okay. Then I also want to talk about realistic expectations and setting goals. It's it's okay to set the goal that you want to be rich. It's okay to set the goal that if you have a $100 account, trading account, it's okay to set goals like I want to have 150 in 6 months from the $100 account, or I want to have $200 at the end of the year from my $100 account. It's okay to set goals, but the difference with thinking this is get rich quick scheme is to have realistic expectations. Okay, when you believe this is a get rich quick scheme, you don't have realistic expectations. So your mind is crazy. You think everything you touch will turn into gold. Every trade you do is going to be a winning trade. Now, having realistic expectations is to understand who you are. Are you a beginner? Do you have 5 years of trading experience? Are you an expert, or are you just average? If you open 10 trades, how many trades will be winning trades? Being realistic is asking all these questions. Being realistic is not just opening the platform, putting in money and start trading. That is not realistic. That is dangerous. Okay? That is dangerous. Absolutely dangerous. So having this realism will be able to support you in achieving your goal. Because if you have realistic expectations and you have that expectations built up from understanding what is normal, what is practical, then you will not make big trade sizes. You wouldn't open a trade if you have $100 account. You wouldn't open a trade that is with $20. $20 is just one fifth of your $100 account. That's like 20% of your account. You can only make 5 trades if every trade is $20. So being realistic means that you understand you got to know some things, not just technical indicators, not just asset, not just news, but you also need to understand how much money do you put in per trade. And if you lose money, What should you do? Do you put in more money? Do you increase the size of your trade, or do you do something else? So that part, that something else, is called risk management. And if you have realistic expectations, you understand that this is not a one-way street where if you start trading, the only thing that can happen is you're going to be successful. It's not. If you have realistic expectations, then you understand that there is two outcomes. One, you're going to be successful, and second, you're going to be losing money. If you lose money, how do you respond to that? So risk management is one of the ways you can respond to losing trades. And the realistic trader, beginner, average, or advanced, they read up and apply risk management techniques. One of those techniques is don't put don't make large trades. So if you have $100 and you are beginner, open a trade using $1 and see where you go with that. Open 10 trades, $1 per trade. So that's 10 trades. That's going to tell you a lot, because at the end of 10 trades, you're going to see whether your analysis is accurate, whether you are able to win. And then that winning and losing from the 10 trades is going to give you a percentage we call the win rate. So that win rate is important. It's going to tell you how likely you are to make a profit from the next 10 trades. So if you lose 4 trades out of 10, that means you have a win rate of 60%, you have a losing rate of 40%. So, from a risk management standpoint, that's really good because you're winning 6 out of 10 times. So, if you just repeat that, you will likely be more or less following that average, assuming you follow the same strategy. Now, some traders, they have a good win rate, but they don't know anything about keeping the strategy constant. What happens then is next week they use a different strategy. Next month they use a different strategy. Do you know why? Because they have unrealistic expectations. Unrealistic, like how? They think they need to have 100% win rate. That's not realistic. So being realistic is knowing what is real, learning from other people. All good traders will tell you there's no such thing as a 100% win rate. It doesn't exist. It doesn't exist. Even if you put computers, AI, to do trading for you, the result is not going to be a 100% win rate. So remember that next time before you expose yourself or increase your account trading balance. Okay. Let me see what else. Yeah, you got to set goals. Yeah. So let me know if you have any questions on this topic. We can certainly talk about it now. Thank you so much for participating and joining us today. We love talking about this, and we are talking about trading, we're talking about techniques, and we are talking about analysis, psychology every week. So, thank you for joining us. And be sure, even if you're not joining us live, be sure to watch the video so that you understand fully what we are talking about, and share the video, link to the video or future live streams in the channel with your friends so that more of them could join and more of them could benefit from this uh, content that we are putting out. We only want you to become more successful because if you look at the statistics, more than 30% of traders lose money when they trade. And all the brokers share this statistics openly because it's real. That is the reality. Okay. And if you look at some other stats, I think there was a statistics shared by survey done by Investopedia. I think 1.6% of traders are consistently profitable. So the statistics are saying, 30%, only 30% make money, 70% lose money. Now, this survey by Investopedia is actually saying only 1.6% not only make money but make it consistently. So you could join the group of traders who make money, but consistent is a different story. You have to be really different. And you can get there. It requires practice. It requires you to have a foundation, intellectual education. You got to learn stuff. Um, before you start trading, before you go and put real money. So I'm getting a question here by Vishal. What strategy I use for profit? Well, if you're just starting out, and this question is usually um, is popular with traders who are just joining and just starting out to trade. One of the easiest ways that you can trade as a beginner, and the strategy that you can use is activate your simple moving average line. If you activate your moving average line, and I'm going to set a short number here. If you activate a short SMA line, okay, and hit apply. Okay, there you see that purple line there. That's my SMA line. I'm using an SMA 9, and I'm using a 5-minute time frame, or maybe I can use 15 minutes. Okay, so I look at this line, and if you just scroll back, okay, Vishal, if you just scroll back, you'll see that the asset, in this case GBP, JPY, OTC, is always moving above or below the line. Always. It doesn't stay above the line all the time. It doesn't stay below the line all the time. It crosses time and time again. It will cross in both directions, up and down. So one of the things that you can do if you wanted a really simple strategy to try for profit, and I've made some profits with this strategy as well. I still use it until today. Whenever you see the asset price crosses this line in the other direction. So as you can see, the line is moving in an up direction right now. Now, when the asset crosses this line in the opposite direction, so now it's moving up. So if the asset crosses by moving down, and then and then after that candle closes, the candle that crossed the line, the simple moving average line, and then you wait for another one or two candles. And if those additional or new candles after the first one stay below the line, try and open a trade in the down direction. Try that. Because whenever the asset crosses the line in the opposite direction, it often shows a change in trend. Look at this. The moving average line is going up, and then the asset trying to cross it by going down. Now, it didn't really happen here because this candle crossed the line, but these two candles went back above the line. So nothing has happened yet. Wait for the wait for the time where you have one candle crossing the line, and then the next one, two, or three candles stay below that line. That's when you open a trade in the direction of the candle. So if the candle is moving down, open a trade there. You could make some profits here. So these are 15-minute candles. So if you open a 5-minute trade, trade duration of 5 minutes, 10 minutes, you could probably make some profits here. And it also works the other way. Look at this. The asset is moving down. Sorry, the moving average line is going down, and the asset is trying to cross in the other direction by going up. So don't pay attention to this green candle because the next two candles went down below the line, went back to following the moving average line. Look at this candle. This candle crosses the line, and then the next two candles is stays above the line. So then, if you open a trade, you have a better chance of making profit in that new direction. Hi Kushu, I'm seeing you. Where are you from? Type that in the chat. Nice for you to join us. So I hope that answered your question, Vishal. Yeah, Rahul, I hope to be able to show you my real account soon. So it's something that we are working on. Come back again, check us back in some future live stream. Hopefully, we'll be ready with me showing you live accounts. Ahmad Farooq from Pakistan. Hey man, thank you for joining us. I hope you're getting a chance to watch this video from the start. If not, you can always watch the video from the beginning after the live stream, Ahmad and Kushbu. So yeah, so that's what I have for you today. I hope it has been useful. If you're enjoying this video, give us a like, subscribe to the channel if you haven't, and also pay attention to the promo that's running right now. It ends in a few days, so there is a promo going on right now. All the details are in the description, so go and look at it, and then you hopefully you get a chance. You can double your deposit, so you get more money to practice. Okay, so that's something. Yeah. Okay, Vishal, no problem. Me, I'm from Malaysia, so joining you in about the same a few hours away in terms of time zone. So that's all I have for you today. Hope to see you in future live stream. Don't forget to take advantage of the promo that's currently running. So I will see you next time. Join us again. See you.